Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
All right, welcome back everybody to the Reinsurance Podcast, where we've got something very unusual today, very exciting as well. So thank you both to Zac and Carsten from Meanwhile, who are doing something with Bitcoin and life insurance simultaneously. But before you tell us all about that, we thought we should probably introduce you both. So, Zac, do you want to start us off and just explain what's your background and how did you find yourself in the world of insurance? And we'll come to you, Carsten, straight after.
Great. Very happy to be here. I'm actually more of a fintech guy by background who's fallen into insurance. So I worked in government service for a bit in a city in New Jersey in the U.S. My boss was the mayor of Newark, New Jersey. Now he became a senator, and I did a bunch of innovation work, whatever you can imagine that might mean. And one of the things that I was in charge of was financial inclusion and financial empowerment. So why do people in parts of Newark not have bank accounts? Why do they do check cashing? All of this sort of questions about how to improve their financial lives. So when Corey decided to run for the U.S. Senate, I was like, oh, this is what I'm really passionate about, is this finance stuff. And I thought to myself, everyone should have a bank account because the marginal costs of database entries is zero. At the time, I did not know a lot about fraud or compliance or risk management, but that was my theory. So I really just applied to the startup that seemed like they were doing cool stuff in fintech, and that ended up being a now giant company called Stripe. At the time, I was employee 36 or 37, and then I sort of got the founder bug. When you're at such a small company, I didn't really realize that they were going to be so successful, and that even at 36 people, they had something incredibly special. So in the worst financial decision of my life, but the best life decision, I left and went through Y Combinator, and I started a startup, and I was backed by Andreessen Horowitz and Index Ventures and a bunch of other people. And we built banking infrastructure sort of between banks and fintechs, so APIs, if that's a meaningful acronym for people, sort of between legacy financial institutions like Goldman Sachs and JP Morgan and others, and fintechs like Stripe and other people. And then we ultimately sold that business to Silicon Valley Bank. This is in 2015, so they were a going concern. And then I did a bunch of other startup-y stuff. I led product at another fintech unicorn. I did another stint in government service as the first chief data officer of California, which I don't really have a lot to say about, but I did learn a lot about wildfire and data, which ends up being a huge thing in insurance and reinsurance. And the job I had immediately before this one is I was a leader in the fintech practice at McKinsey. So I sort of took all that knowledge I had developed in building companies. I actually did that at McKinsey. So there's a practice there that not a lot of people know about, but basically McKinsey will help incumbents build new businesses or new business units. And I did that basically one a year for 3 years, and would go in and basically start a whole new business, and I would be the CEO, and then would slowly build a business around me, and then replace myself with some incumbent. And that was really fun. You learn a lot about I learned a lot that if you can teach these giant companies to deliver good product, they can really sell it because they have so many relationships and salespeople. But I had the bug to continue to be an entrepreneur, and my old friend, who's now my co-founder, he was also free, and we started Meanwhile, which we will talk more about, in January 2022.
Very exciting.
We did the same thing. I think that's definitely
I think we've been doing it for 3.5 years. So I think in 2022.
Yeah, good
Nice.
stuff.
How about you, Carsten?
Well, I come from a more traditional reinsurance background. I studied in Switzerland, started my career in Switzerland as an actuary, worked for a legacy reinsurer, acquiring business, moved to Bermuda after I'd been there with them for 5 years. I was with them also for 2 years on Bermuda before I jumped ship to the life insurance side. Been with Meanwhile for 5 months today, I think. And looking at all the risk, it's very different risk we look at compared to a more regular life insurer or reinsurer, which is very interesting. It's very interesting to have a new currency. Never done the business in that before, but all the calculations on the liabilities coming from like being an actuary is the same. Just put out change the currency basically. So very interesting, very new. Very short intro.
Yeah, very cool. Well, we're excited to have this conversation because it's touching in both crypto, which we've dabbled in a little bit before, but life insurance, a topic we don't cover nearly enough on this podcast. So I'd love to get an idea of the sort of founding journey. What was sort of the genesis moment when, if you come from that background of going, everyone should have a bank account and sort of understanding and wrestling with the challenges of why that actually happens, there must have been a similar parallel to looking at the life insurance where there's gaps and things that could be fixed in the life insurance category. What was that sort of genesis story that you guys had?
It's going to sound sort of funny. I mean, in the first company I founded called Standard Treasury, we were thinking about starting a challenger bank here in the UK. Because basically we were trying to build like white label banking. And actually one of our then employees went on to do that. So there's a bank here in the UK called Griffin, and Griffin Bank is like a white label challenger bank. But after Standard Treasury got sold to Silicon Valley Bank, learned a ton about banking. And I really had a realization, which I think, the Apollos and KKRs and everyone else in the world has, which is that the best bank in the world is actually a life insurance company. Because there's from the perspective of the person running one of the companies, there's very little run risk, right? So like the fundamental challenge in banking is that you promise people deposits, which is like they can get their money back instantaneously, and then you go make mortgages. So there's this like fundamental mismatch, right? There's this duration liability mismatch in banking where your deposits can in theory walk out the door and your loans can't. This is like the scene in It's a Wonderful Life where we don't have the money, it's in Bob's house and it's in Mike's house. And actually this is what blows up Silicon Valley Bank too in the end. So I thought a lot about life insurance through that lens, which is more the lens of like running the company. This is like 2015, 2016. I wish I had like followed that insight like then, right? Obviously, as I said, Apollo owns Athene and KKR owns Global Atlantic and Blue Owl just bought Guvar. Like this is sort of like a fundamental thing that's been happening or that folks have realized in the last 10 years that there's a lot of taking permanent capital and doing loans with it is like a powerful force. At the same time, though, you begin to realize, and actually in Bermuda, they're not called life insurance companies. They're called long-term insurance companies. And I think that really touches something fundamental that we think about these companies as though they primarily do life insurance, but they also do retirement savings, and they do, which is what an annuity basically, a deferred annuity is. And that idea that if you sort of put aside what all the products are called and what you think about them, the life insurers are really about saving. And they're saving for you as an individual, they're about saving for your family, they're about intergenerational sort of protection and wealth transfer. So that was a very powerful idea for my co-founder and I. And then what we were really doing is we actually came at it, so this is like in the air, and I had like written some pitch memos around life reinsurance and life insurance. And the problem is that as technologists, you realize pretty quickly like there's not really a good enough like story there or go-to-market story to start a company. Because these are data and technology companies, but let's imagine you're like the best life insurer in the world. you're going to turn your 8% ROEs into 12% ROEs, and unless you have $1 billion, the normal way of starting a life insurance company is you raise a ton of money at the start, you take a ton of dilution. So it's just not clear that technology is a good go-to-market motion, and you see that lots of people have tried, like, I don't know, Ladder and Ethos and others, but they haven't really figured out how to churn life insurance, and let alone life reinsurance, into, I don't know, using technology to like make it amazing. I mean, it can be amazing, but to get scale.
Yeah.
So we sort of put this on the side. Like we written these memos, and like it was just sort of there. And we actually came at it more from the crypto Bitcoin angle, where we, and this is just going to sound crazy to some of your listeners, which is just like, we believe there will be a crypto economy, there will be a Bitcoin economy. And we thought of it through that lens of, okay, let's imagine this is an economy. It has some weird features, right? Like it's global and it's sort of decentralized and it's somewhat outside the control of any government. But fundamentally, if you think of it as an economy, and we recognize in ourselves an idea that we are super comfortable with like regulatory stuff. That's sort of our background. Like I worked in government twice. My co-founder had sort of similar backgrounds in fintech. Which is very comfortable, writing a 1,000-page business plan for the Bermuda regulator. So we sat down and we said, okay, in this crypto economy, if it's like any other economy, what are all the financial institutions that are going to have to exist? And we had that lens. So we're like, okay, there's going to have to be a bank. There's going to have to be a payments company. There's going to have to be like an asset manager. There's going to have like literally what are the licenses that the FCA or the PRA or the Bermuda Monetary Authority will give you, and like, and then we actually didn't come up with life insurance. So we didn't really have an idea we believed in. This is like in October 2021 before we started the company. And then about 2 weeks later, I woke up in the middle of the night at like 3 a.m. I was like, there should be a Bitcoin life insurance company in some sort of like flash of genius. Again, merging these like ideas we were talking about, but like somehow didn't bring together. And then I went like to my office and I wrote the memo that became the memo we raised our seed round on. And basically we have done amazingly exactly what that memo said, which is that we said we were going to go to Bermuda, we were going to start a life insurance company entirely denominated in Bitcoin. We were going to start with policies for high net worth individuals, and we can tell you like all the parts of this journey. And then our ultimate goal is to like go down market, and if you're a middle class person in Argentina, you don't buy life insurance because you're going to live longer than the Argentinian peso. So that was like the initial memo, and so far so good. We're 3.5 years in.
Oh, amazing. Cool. So just for our listeners who are slightly blown away by the mechanics of it, so hang on, Bitcoin, life insurance. Maybe, Carsten, can you give us just a flavor of like the basics here? How does that work?
Imagine any other life insurance company, but rather than giving sterling or US dollar, we accept Bitcoin payment, or we only accept Bitcoin payments. So you pay your premium in Bitcoin, your cash or surrender value would be in Bitcoin. So all in between, the balance sheet is in Bitcoin. We got audited in Bitcoin. That's our currency. When you pass away, hopefully long years in the future, right? The beneficiary gets paid out Bitcoin. So you accumulate value in Bitcoin. That means that if Bitcoin goes up, you get more, but in 1 Bitcoin equal 1 Bitcoin for us.
Amazing.
And so that's how you protect the downside risk, would be that the trade-off of one in is always going to give you.
Yes, like our balance sheet is Bitcoin. So regardless of what Bitcoin is worth, we have the same balance sheet. Our balance sheet doesn't translate into dollar. Yeah,
it's fine.
So that's why like 1 Bitcoin is 1 Bitcoin for us. 1 Bitcoin is not $108,000. It's 1 Bitcoin.
And then the policies. I guess there's a specific policy we have now, or all the types of things we might do, but like fundamentally they're the premiums and the face amounts are just in Bitcoin.
Yep.
So you might pay us 10 Bitcoin in premium, and we promise you 14 or whatever it is. And then, like a normal insurance company, we have to turn 10 into 14 and like through an investment program and an asset management program. But we do all of those mechanics in Bitcoin, right? Yeah. So just like to Carsten's example, if we were running a Swiss franc company, we would go buy Swiss bonds or whatever. Like we're running this Bitcoin life insurance company, so we make investments not in the asset of Bitcoin. That's like the currency. We make investments in term loans nominated in Bitcoin or prime loans nominated in Bitcoin. And then from our users or our policyholders' perspective, I think that they obviously think that when they die, hopefully in a very long time, that Bitcoin will have more purchasing power. So that 14 Bitcoin won't be worth $1.4 million, which is like what it's worth now, but it'll be worth some other amount of money. But it's very interesting to talk. We don't really try to convince people to be interested in Bitcoin. We like take people who are interested in Bitcoin and we sell them this critical ancient financial service in life insurance, right? So I have this simple question, which is like, okay, if you had to buy life insurance and you had a death benefit, would you want $1 million or would you want 10 Bitcoin? And there are probably many listeners who are like, I want $1 million. Like, well, I don't want, whatever, Ponzi coin. But for a lot of young people, for a lot of international people, just for a lot of people, actually 10 Bitcoin sounds pretty good, right? If you, I think sometimes my son's 7, if I had bought $1 million of face amount coverage in 2018 when he was born, I've seen the purchasing power of that policy go down 20 to 30% because of inflation. So anyway, it's all in Bitcoin.
Well, and it goes back to that sort of core thesis of if it's going to be an economy, we have to stop doing that translation, that sort of conversion layer all the time. Like when I first moved to London, you do as anytime you're an expat. No, all the expats will get this, but you sit there, you go to the grocery store, like that's this much in my native equivalent currency, and after the first few months, you're like, false. I make money in this new currency, and all the things I was buying are in that. Like this conversion layer needs to go away because otherwise you just get in your head too much. And I think you're doing the same thing there. It's saying I'm not even thinking about the sort of USD equivalent of the Bitcoin here. I'm going.
Correct.
I'm buying 10. I'm going to return 14, and this is the purchasing power of that thing. And the purchasing power might swing in, go in swings and roundabouts, just like other currencies do. But if you anchor it as like that is the transactional currency and that's the process, it sort of begins to sort of establish that economy layer, I think, in a really powerful way.
We believe by having the premiums coming in, they're long term, like long duration, we can also support a market in like lending Bitcoins or investing Bitcoins for Bitcoin yield, which is fundamental for any currency.
Do you think you'll expand beyond into other sort of crypto assets, or is it are you going to remain just in Bitcoin? Are you going to use other either pegs, fiat currencies, or
we fundamentally we're making promises to people that last for decades. So on other, I guess, pure cryptocurrencies like Ethereum or Solana or Avalanche or Tron or whatever, I think we're not maxis in the sense. There are some people in the world who think Bitcoin is king and everything else is garbage. I think those are all really, to me, interesting technologies. And the idea of decentralized computing, which is what a lot of those are about, is a really powerful idea. But I don't necessarily know whether those tokens will be a store of value long term. Whereas Bitcoin very specifically is sort of playing that role in the crypto economy and is perceived by many people as an asset that will retain and grow in value over time. So we're very comfortable making these really long-term promises, specifically in Bitcoin, and we're not yet comfortable making, 30, 40, 50-year promises in any other token.
Yeah.
Having said that, to go back to my example of the Argentinian, or if you live in Turkey or Nigeria or Indonesia or whatever, a country that has a lot of inflation risk or political risk or currency risk, and this is partially, speaking as an American, we do think that Bitcoin's like the best store of value in the world, but we also think the dollar is a pretty good store of value. And I think you're seeing with USD stablecoins that it turns out there's just a lot of people in the world who want to save in dollars. There's a lot of cross-border transactions happening in stablecoins, but it also just turns out that if you're in Nigeria or Argentina, you prefer to have your savings in USD stablecoins than the local currency. And that goes back to okay, if our fundamental mission is to help folks save in these global decentralized stores of value, I think that idea of doing something in stablecoins is very attractive, and the idea of someone coming to us, or we can get to this, but a local carrier in Argentina working with us to launch products in Bitcoin and stablecoins, that idea makes sense to us. But beyond that, I think we don't have any plans.
Makes sense. Super interesting. And I guess maybe the scenario you just described is a nice segue into the possibility that does this one day expand into the reinsurance world as well? What would that look like if you even had to do Bitcoin reinsurance?
Well, I think what I'll say is we announced a $40 million Series A in March. So we've now raised $61 million today.
Congratulations.
Yep, thank you. I like to say that raising money is an obligation, not a... so I keep telling the team, it's not success unto itself. It just means we now have to produce more value. But thank you. I think we've been somewhat surprised at the inbound we've gotten. I think it turns out that many carriers and reinsurers have, we're not the smartest folks in the world. Others have thought it'd be pretty good to have a fixed index annuity where the index was the price of Bitcoin, or here in Europe, maybe an insurance bond in Bitcoin, or a tax wrapper type policy in Bitcoin, or a universal index life where the index is the price of Bitcoin. And so a lot of product people in the world have had this idea, oh, there's a new asset, why don't we put it in insurance? And it turns out that proves somewhat difficult, partially for really mechanical reasons, like the options pricing on Bitcoin is very high, very expensive, relative to the notional value. But also, there's more structural reasons, which is because Bitcoin is such a volatile asset relative to fiat currencies, it can be very expensive to hold that on the balance sheet of a traditional insurer. So we do not have a reinsurance contract right now, but the licenses in Bermuda there isn't a separate license for being a direct insurer and a reinsurer. You do need permission from your regulator, so I don't want to get in trouble. You do have to confirm that you are going to do both and model it all. But I would be surprised if within the next 18 months we haven't done what is essentially a reinsurance contract, so that a carrier in Argentina or a carrier in the United States or a carrier in pick your country brings to market a product that has some embedded exposure to Bitcoin, but that exposure is created by us holding Bitcoin on our balance sheet. So we're the reinsurer, we're the retrocessionaire for sort of a more traditional carrier bringing this innovative product to market.
Really exciting. Yeah.
Karsten's working on the math.
That's the hard bit.
It's hard with the option pricing, and we would like to find a structure where we actually outright buy the Bitcoins, so we hold the Bitcoins on the balance sheet. We have the position that we can hold Bitcoin at a low capital cost because it's our currency, versus if Aviva wanted to offer this, they will in Europe, and the PIA, I'm sure, follow IOPA, they will say you need 100% capital charge.
Yeah.
Well, you can reinsure it to us. We will hold whatever we have to hold in Bermuda. It's our currency, so we don't have the currency swings. That's a big benefit. And we can hold the Bitcoin for you, and you have a credit exposure to us, which everyone understands. We could collateralize it. We could mitigate it by many things when we unrate it.
Yeah. It's super cool. We're running out of time already, which is a shame. There's so much interesting stuff here. This feels like we're getting like a glimpse into not just the future of how some of these products could work, but like a future of the role of insurance in like economies that don't yet fully exist. Like they're sort of teetering on these Bitcoin economies, like even beginning to emerge. We'll have to wrap it up here, but we'll hopefully bring you guys on another time and continue leaning in. But where should they go to learn more about what you guys are building?
Meanwhile.bm, which is the Bermuda
domain.
Yes.
Which in and of itself welcomes you to the Reinsurance Podcast. The Bermuda domain name is an open invite to the Reinsurance Podcast.
And can listeners buy life insurance in Bitcoin anywhere? Do you have to be in any particular countries for now? Or?
We have to be able to underwrite you. So the less exotic the locale, the more likely we are to be able to underwrite you. But yes, so our current product's a whole life product, and folks can go to the website and reach out to us. And then, we're hoping to expand our product set and do some of these reinsurance things. So all that's available.
Very cool.
Meanwhile.bm.
Yeah, we got a lot of Bermuda listeners, so I'm sure you're going to get an influx of policy interest from our team here. So
yes,
thank you guys for your time. This has been great.
Yeah, thanks for having us.
Thanks for tuning in to the Reinsurance Podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts. You'll find the links in the show notes.